Welcome to my Daily Dose with Tim. Today is Season 1, Episode 40. Oh my goodness, we're at Episode 40 already. So as you guys know, this week has been all about one of my absolute favorite strategies. Actually, it was my baby strategies. It was the strategy that actually got me out of the rat race and retired myself at the age of 30. And so it's super passionate about it. And I sort of thought that, you know what, it'd be really good to walk everybody through how the deal analysis goes. And yesterday I shared with you a live deal, and I was attempting to do two, but I think that was overly ambitious. So we're gonna share another live deal with you, and this live deal is actually currently being managed by two of our coaches on the Trust Your Talent team, Vince and Chewy. And I believe this deal is actually still available. So for those of you who might be looking to get into a lease option opportunity, feel free to contact them. I'll put their name down or I'll tag them after this as well. However, the whole point is this deal is also located in Ontario, which means when we're doing the calculations in a little bit, we will have to factor in land transfer tax. Because I understand that on Wednesday, when I was going through the first mock example of deal analysis on lease option, I did not factor in land transfer tax. And the reason behind that is because, well, we are one of those lucky people in the Canadian markets where in Alberta, when we buy a property, there is no land transfer tax. So if you did not know that, now you do. And the cool thing about that though is that you can actually run the deal analysis for yourself and see what kind of an impact that has on your deal. And I'll give you a quick hint. It usually does not impact your cash flow, meaning your monthly performance. However, it does impact your return on investment because you're going to come up with a little bit more money when you're actually getting into the deal. Remember, how much in, how much out, how long, and how is my money secured? So without further ado, let's quickly come and take a look at this deal. So I learned from yesterday, I pre-populated a few more things now so that I'm not spending too much time writing it all out. Lease with the option to purchase, remember, rent to own. And we keep saying this, it's not rent and maybe own. And I want to show you this because yesterday the deal example, and it's actually not an example, the live deal that Brooke is managing was a 2-year deal. This one is actually a 4-year deal. I remember 9 years ago when I first got running really hard with this strategy, I always said that 3 years was actually my maximum. However, as the lending rules started tightening up more and more over the last few years, we started to stretch that out to 4 years as well. And I still do my best not to go into the 5-year mark. However, sometimes you might have to stretch beyond the 4-year mark. And just so you know, it does not always have to be 1, 2, 3, 4, 5 years. It doesn't have to be that kind of clear cut in the sense that you can do a 4 years and 3 months deal, 4 years and 5 months deal. It just really depends on how your tenant buyers are being qualified and how much time they actually really do need for you to help them get to the finish line so that they qualify for lending of their own when they are able to satisfy all 3 criteria. Okay, so I know we're not in a classroom environment right now. Usually I do a pop quiz. I'm just going to give you the answer. The 3 criteria being income, credit, down payment. Okay, income, credit, down payment. So going from, I always say, go from the end goal in mind. Okay, the end goal is to make sure that they actually get to purchase the property. So if their option to purchase at the end is $410,000, we usually aim to get them to the 10% mark. However, I have been made aware of the fact that with this particular opportunity, they're actually gearing the tenant buyers into the 20% mark. You know what? Sometimes when you explain this entire process to your tenant buyers, they will opt to go into the 20% mark. They're willing to push themselves a little harder. Why? Because they understand that the more that they force themselves to save up in the next 4 years, the easier their life is going to be afterwards. Why? Because the more money they put down, the smaller the mortgage, meaning the smaller the mortgage payment on a monthly basis after. And they don't have to pay extra for mortgage insurance with CMHC or one of the other mortgage insurers. So if we're going to do a 20% total option consideration, then that basically means it's $82,000 that we are saving up, okay? And initially they come in with $30,000. I love tenant buyers like this because, well, that just really means that they are serious about this and they are committed to the entire process and they want to be successful. And so 30,000 in, that means there is a shortfall of 52,000 that we have to make up over the course of 4 years. So that's 48 months, meaning on a monthly basis, if we break it down this way, let's take 52,000 divided by 48 months, that's about 1083.33. So I'm gonna round it up here. Okay, if 1083 is the minimum on a monthly basis to hit their 20% mark, then I'm gonna round it up a little bit just so that it definitely will hit the 20% mark. Because I do remember seeing some other investors, especially the ones that didn't really double check their numbers, or they were not actually coached properly, or nobody was there checking their numbers, they actually shrink that. And I understand, some of you might be thinking, well, it's a few dollars. It's easy for them to make that up at the end of the day. However, there have been times where if you don't prove right off the bat that you've collected the entire 20%, there are lenders that will kick up a bit of a fuss, because you got to remember, your tenant buyers, when they're actually closing on this property, they still have to come up with some out-of-pocket expenses at that point too, especially land transfer tax now for them, and also their legal fees. We're not covering that for them anymore at that point, okay? So if its monthly option is 1085, fair market rent in the market that this deal is going to be located in is $2,000. And remember, that $2,000 actually does not change for the next 4 years. So the benefit for the tenant buyers, honestly though, is the fact that they get to budget their monthly expenses really well when it comes to housing, okay? So 1085, you add it all up, you have a monthly payment or total revenue from our end of 3085. So that's money going into your pocket. Now, we gotta remember, in order for us to find out the cash flow, we need to find out what the expenses are on a monthly basis. So if we're doing our pity payment once again, well, grab your trusted little iPhone or whatever phone you use. The point is, go to the Canadian mortgage app that I've been sharing with you and you punch in the number. So right here, we said the purchase price on this property is $350,000 at this particular moment. And assuming that the investor that comes in to qualify for this deal can get away with 20% down and get a 4% interest and 25-year amortization, basically punching all that in now, you're gonna get a monthly payment of, well, monthly pity payment, meaning mortgage payment of 1477.94. So in this particular case, I'm just gonna round it up a little bit, so 1478. Okay, I'm rounding it up by 6 cents. So that's not exactly finding a lot of money. If you remember a couple of days ago when I was going through the initial formula and example with you, I always say that I like to underestimate revenue and overestimate expenses. Why? Because it's a really good feeling when you find money, isn't it? And so when you do it that way, you're actually adding an extra layer of protection for yourself. At the same time though, you really do get to find some money, typically speaking, in most deals that you do. And so taxes, I was given 300. Insurance, I was given an estimate about 150. So if we add it all up now on a monthly basis, our pity payment is 1928. So what that means is our cash flow on a monthly basis, we take 3085 and then we minus 1928. There's 1157 on a monthly basis. Look at that, okay? Once again, this is an amazing strategy for a lot of investors to go into, whether you're seasoned, whether you're new. I know this is already the last episode for this week, and I was kind of thinking I could wrap it up today, but there is there are just a couple of things that I really want to share with you about this strategy, because I really do believe that this is one of the best strategies out there where you get to make money, free yourself, gain financial freedom while helping other people. And there is a really, really cool math that I want to show you next week. So I will definitely carry this on. However, coming back here now, 1157, you're cash flowing for 48 months. That means in total, your profit from cash flow is $55,536. Not too shabby, right? So coming back here now, not only are we cash flowing, okay, we've already pocketed $30,000 up front, and that is something that a typical buy, rent, and pray strategy you just don't get, because usually you will buy the property, advertise it, and wait for somebody to respond, screen them, and then they'll move in, and you pray that they'll always take care of the property, and that's about it, right? And pay rent on time. So coming back here though, remember your tenant buyers are typically not your professional renters. They're the people that have the aspirations, they have the goals and the dreams to become homeowners. There's so many stories that I can share with you, so maybe that's something that I can do next week as well. Just so that you really truly get a sense, because money is great, don't get me wrong, and the strategy is amazing. At the end of the day, it's about that personal connection that you can make with people, because we always say that even though, yes, real estate is hard asset and this is an investing business and it's a business, however, just like most other businesses, everything is about the people, okay? So coming back here now, when we're selling the property back to the tenant buyers, I'm just going to write this out quickly for you, because we don't own the property outright. So what that really means is when the tenant buyer is buying it out from us, there is a mortgage balance of $251,702. And one of the reasons why they are doing this program with us is so that they can actually satisfy their final down payment. And we always tell them that, hey, you know what? Your total option consideration will turn into your final down payment when you're qualified and choose to exercise your option to purchase the property. And so at that point, on a monthly basis, we've been collecting 1075. Remember, I always say come back here and redo the math backwards, just so that, because we're rounding numbers sometimes. If you're doing this on a spreadsheet, it's automatic. However, if you're doing this on pen and paper, like what I'm doing here, you always just want to be sure about it. So take that extra step, okay? So 1085 times 48 months once again, and plus the $30,000, because this is the total amount of option consideration they put aside with you that you've collected now at this point. So 82,080. Have we actually hit the goal of 82,000? Yes. So what that means is by the time they're ready to go in and qualify for a mortgage to buy this property out, they have 20% put aside already. That'll turn into their final down payment for the purchase. And so paying the lawyers to close on the deal for us, okay? And last but not least, initial investment, okay? If you invest $100 into something and then a year later you get 110 back, what is your total profit? 10, not 110, because you still got to pay yourself back first. So your initial investment is your 20% down payment. So 20% down payment on $350 is your $70,000. And usually in the beginning, you're going to have to pay for inspection and appraisal. That usually adds up to be run-of-the-mill average single-family homes, about $500, so $1,000 in total, plus lawyer fees, usually not so much, but once again, overestimate your expenses, right? And because this deal is located in Ontario, once again, when you go back to the Canadian Mortgage app, make sure you scroll down. The third box is land transfer. So if you've already got it set for Ontario, like I did yesterday, then you'll see at $350,000, okay, it is $3,725 in land transfer tax. So when we add it all up now, 70,000, so 73, so 76. Actually, don't need a calculator. 76,725 is our total initial investment. Make sure we pay ourselves back first before we find out the true profit at closing, okay? So let me take this out. Option to purchase is 410. That's money going into your pocket on closing day. However, these are the expenses that have to come out of your pocket, okay, on closing day. Let's see. 251702 minus 82080 minus 2000 and then minus the 76725. So we just have a bit of a shortfall of minus 2507. So it's really interesting because both deals that I've leveraged now, both live deals that are happening in Ontario, I love these deals myself, to be really honest, because most of us were going after the cash flow. And a lot of people ask me, oh my God, Tim, we always say, like the way I teach and the way we teach at Trust Talent is that there are two main priorities when it comes to every deal that we go into. Number one, cash flow. Number two, return on investment. Cash flow tells you whether or not you have a viable business. Return on investment tells you how hard your money is working for you. However, they have this inverse relationship. Usually if the cash flow is good, the ROI is usually not as good. And so what should I really focus on in the beginning? Well, once again, it's all about the goals, okay? Most of us, we're looking to build our passive, so I would suggest that you focus on passive, even if that means your ROI is a little lower. Why? Because we always say time is everything. If you manage, and when you manage, actually, I shouldn't say if, I have faith in all of you. When you manage to free yourself financially, you have choices to not show up for your regular JOB, for your regular just over broke. And so what that means is now you have the knowledge and time to go and do deals that will focus a lot more on return on investment or cash on cash returns, depending on what strategies you're doing, okay? So that's typically how it works, because you got to remember, it is a process, treated as a process. So coming back here now, that really just means that maybe on a monthly basis, instead of really treating the entire $1157 as cash flow, I think you probably only need to put away about $57, which means you're still cash flowing $1,100 every single month. I mean, think about that. How many of these deals do you need to do to become financially independent or to become financially free? And that is why we always talk about the fact that it's numbers, numbers, numbers first. The deal needs to work, and that's why it's goal, SMP. Goal, strategy, market, and property. You never look at property first, and that's why this particular strategy also is the perfect demonstration for that, because we focus on tenant and tenant buyers first, making sure that they are able to qualify, and we do the deal analysis to make sure that it does align with our business goal or personal goals for that matter, and then we proceed, okay? So let's wrap this up now. If we add these two numbers together, what that really means is the entire profit from the whole deal is $53,029. $53,029. And if we want to get the return on investment on this deal, this is your return sitting on your initial investment, which is $76,725. I want to make sure you guys can see that. Yes, it's just kind of squeezed in. So divided by 76725. It is, let's bring it over here, 69.12% over 4 years. So what that means is we got an annual return on investment of 17.28%. Okay, so it's really interesting. Both life deals actually have very similar return on investment. I mean, these are still double digits, still great returns. However, remember, everybody's goal is very different, because I've also worked with money partners where they're like, you know what? I actually make good money right now. I don't want you to pay me anything, and so just pay me at the very, very end. And so what that means is you actually get to bank all of that during the time that you're managing the deal on behalf of your money partner. However, the idea behind all of this is that there are always people with the scarcity mentality. They're like, oh my God, okay, will somebody actually do something like this? Or, who's gonna come in and do a deal that's 17.28%? Because I thought all of you guys are aiming for 20%, 30%, or infinite. Well, this is a deal analysis, and infinite really just means that if you're the managing partner, typically speaking, unless you put your own resources into the deal, it is always infinite return because you're being rewarded with infinite returns on the knowledge and the education that you've got. So this is a current live deal from Chewy and Vince as well. I'm gonna tag them, so if you got any more questions or if you're interested in a deal, make sure you speak to them. Crazy cash flow, so love it. All right, this is my daily dose with Tim for the week now. It's been all about lease options, and I went a lot further into deal analysis with you over the last 3 days as well. So I'm hoping that this really helps with clarifying how you can actually analyze a rent-to-own or a lease option opportunity, okay, using this framework. Now, every single day, as you know, during the week, Monday to Friday, I'll be coming to you Facebook Live at 4:30 p.m. Pacific Time, 5:30 p.m. Mountain Standard Time, and 7:30 p.m. Eastern Standard Time. So if you like what you're seeing, make sure you like it, you comment on it, ask any questions. I've been doing this, I think this is now, 40 episodes, 8 weeks, and all of you guys have been super supportive, and I've gotten so many messages. I just find that it's really interesting that a lot of you guys are actually quite shy about commenting directly when you have questions, and that's totally fine because I'm happy to address them and hoping to continue to add value and further everybody's financial literacy and business mindset. So I will see you back here next week. Have an amazing weekend. Have a great evening today, and live well, everybody. I will see you next week.